You prefer to sit in the back, I see. Okay. My dear colleague Pate, yeah, okay. Well, dear colleagues, welcome to session number 8, Mitigating Risk for the Last Mile. And I think this is a session where we switch gears now. Not that I think that you need an energizer, which you can have, by the way. It's late in the afternoon. Do you need an energizer? No, you feel fine. That's good. That saves time. So when I say switching gears means we have just appreciated the last session which had a strong focus on research. And I think now the topic invites us to be more practical, more on the development side, more on the operational side. And I can tell you we have 3 exciting presentations by 3 colleagues, which I'm not going to introduce because, I mean, you can read their bios. They are printed, so there is no need to repeat that for the sake of time, because also we don't want to take any time of your reception, which starts at 6 o'clock. So by 6 o'clock you are released, you can leave this room, but enriched. By saying so, what we have planned to do is, as you know from the program, we will have the 3 presentations in the order of Massimo first, Francesco coming second, and Federica last but not least. And then, since the 3 are so interlinked, thematically, organizationally, and even beyond personally, they know each other for years and they are working together very closely. I will give them, before you can come in with your questions and your remarks, I will give them a chance to give a kind of feedback and perhaps to provoke each other in a particular way, or simply complement each other, simply to enrich the presentations which are pre-prepared. And I think there are more dynamics if they have a chance to also talk to each other, not one after the other only. So, and then the third part will be the questions and answer session. Well, with that, I think all introductions should be deserved. I would like to invite Massimo Giovanola as the acting manager, coordinator of the Platform for Agricultural Risk Management, which, by the way, is, if you look at the different initiatives to be presented, facilities or agencies, the youngest, the most recent initiative and platform which has been set up in the field of risk management and resilience. And Massimo is going to provide more of an overview of agricultural risks, how to manage them in a holistic manner. Massimo, over to you.
Thank you, Michael. I'll go on the Okay, my glasses. Thank you very much, Michael. Thank you very much for you to be here with me today. Yes, as Michael said, my session will focus mainly on the overview of agricultural risk management, but with the new, let's say, relatively new methodology, what we call the holistic approach to manage and prioritize risk, which is clearly linked to the topic that we discussed with my colleagues on resilience. Why? Because we know there are different manuals, different ways to support governments and farmers to be more resilient vis-à-vis of risk and shocks. One of these options we can offer today in this discussion is the agricultural risk management, as I say, through an holistic approach. Let me just quickly introduce what is PAR. As Michael mentioned, is a young initiative. It was launched 4 years ago by the G20 and the G7 because they realized that at a global level there was a gap in terms of risk analysis and through an holistic approach. And that's why, with the support of some strategic donors like the European Union, Agence Française de Développement, Italian Cooperation, IFAD, and the German Cooperation through NEPAD, because PARM is actually working only in Africa in this first stage, while in the second stage, the intention to expand to other continents, it was realized that there was a gap in terms of a government level mainly to assess and prioritize risk and instruments to manage risk. That's why the platform was created. It is, of course, hosted by IFAD in Rome. The starting point is that, as we perfectly know, agricultural sector is a sector exposed to several types of risk. We already know climate-related risk, financial risk, political risk, production risk, different type market risk. The question is how to choose the right instruments to support farmers and governments to manage those risks. This is the big question. And as you can see in this table, the answer is not easy because you can make a quick calculation. Here in this table you can find around 35 instruments. So how to choose the right one? Especially when you consider that governments or farmers have clear limited capacities, limited resources, and so they need probably support to better understand how to focus their investment and priorities. The answer is, one of the answers is, from an agricultural risk management point of view, is starting from not the instruments, the tools, but the problem. The problem is the risk. The question is, as I said before, farmers, governments are exposed to different types of risk. How to assess them simultaneously? The methodology was developed by PARM. Is quite unique in the sense, in a quite recent independent evaluation, we realized at the global level only two big organizations are following this methodology. One is the World Bank, the other one is PARM. The holistic approach mainly means to compare, take into account a big variety of risk, okay, and then prioritize them using some clear, rigorous methodology, which is based on two main factors, the frequency and the severity. And based on that, we develop a sort of economic analysis, economic cost of each risk, and then we make a final score. In this table, you can see on the left side the case study of Uganda that was discussed with the government and validated by the government in 2015, so 3 years ago, where you can see that despite the government were expecting a different final conclusion in terms of risk prioritization, we were expecting something more linked to climate. When we present our analysis, there was a sort of, let's say, intensive discussions when we present the crop pest and disease, post-harvest losses, and the major risk. Why? We say climate-related issues can be a priority, but probably not at government level, macro level, but maybe are focused more on specific regions, or maybe affect specific commodities or specific farmers' organization or groups, while crop, pest, and disease should represent your priority. Is it there we have to invest more in your using your budget? And we estimate more or less that at annual basis, the cost for crop losses was around $400 million. This is just an estimation. In other countries where PARM is implementing this program, as I said, only in sub-Saharan countries, we follow the same methodology. And let's say, if I can summarize, the major risks that have been prioritized were more on the climate, related to climate, and to finance, and more to production. This is the three main categories then where we realized with the governments that agriculture sector, farmers were mainly exposed to. So the question is, can we treat the risk the same level? Are the responsibilities the same? Of course, the answer is not. Why? Because, as I said before, if you consider two main elements, the frequency and the severity of a given risk, depending on the value we give to these two factors, we can define the responsibilities. An extreme event, which is very rare, the frequency is very low, but the impact is enormous. Typical example are droughts, for instance, or financial shocks. In this case, we cannot expect farmers to be able to manage the risk. This is more at macro level, government level, donors, bilateral partners, whatever. While, let's say, risk with a high frequency but low impact, an example is, I don't know, the seasonal price variation that usually affect farmers. This is something that should be managed by farmers themselves. In the middle, of course, we have some moderate to medium risk in terms of frequency and severity. Well, risk mitigation instruments can enter into the discussion, and one of them mainly would be entering more and more into the discussion with governments, farm, is the risk transfer instruments, insurance, for instance. So it's important, particularly important here to highlight the layers of responsibility, because the policymakers, market players, farmers at community level have to play a key role. And all of them should be connected, because what is important is to create a network around where roles, responsibilities are well defined. Now, in a concrete manner now, once identified the risk, once more or less identified responsibility, how to manage this, how to support governments and farmers to, manage this risk, what are the most promising instruments. If you look at our analysis of PARM, we identify, let's say, 4 major categories of instruments. Is at farmer level, is financial tools, market tools, and of course government-based risk management tools, as I mentioned before. With our direct experience in PARM, we are, let's say, we can share some insights from, let's say, mainly the 3 of the 4 categories, because for financial instruments we have invested on, for instance, we are discussing with government on insurance more and more, mainly at macro level, because our mandate is more at macro level, while in the second phase of PARM we invest more on the community level approach to support directly farmers. Market instruments, we are investing a lot, because we think that connected farmers to market is the best way to help them to be more resilient vis-a-vis or financial shock, but not only. Okay, having access to market allow farmers, as you perfectly know, to have access to financial instruments, credit, saving, insurance, whatever. And PARM has invested a lot on contract farming. For instance, we can find all this information on our website, because all these studies are public goods, and warehouse receipt systems. An example of financial instruments we personally experimented was in Senegal, where we used we work in tight collaboration with the remittances team of IFAD. Why? Because in remittances, we look at remittances as financial instruments, and in Senegal they represent 8%, if not wrong, the GDP, so it's a big, big amount. So we consider an entry point for farmers or the recipients of remittances to have better access to market or financial instruments if they can use part of the remittances to manage specific risk. However, whatever is the risk analysis, the instruments have been identified, prioritized by governments or farmers, what we strongly recommend is that we don't approach risk and shocks in an isolated manner. The combination of tools, a package of tools, is a pillar of agricultural risk management. And more and more, sorry, I forgot the second slide, the following slide. There are 3 cross-cutting instruments we consider really relevant for agricultural risk management. It was also one of them, maybe all of them, was also discussed this morning. One is data information. This is pillar for government, market players, farmers. Without data, they're supposed to generate information. We cannot approach risk. We need also to invest a lot on the awareness on capacities of all stakeholders, because agricultural risk management is the new topics. Even the instruments, especially financial instruments in rural areas, need a lot of investment in terms of knowledge and of capacities to be understood by farmers, especially the poorest. And of course, one of the cross-cutting instruments is diversification. This is quite understandable, of course, why. Now, my colleagues will enter into discussion about insurance at macro and micro level. From an agricultural risk management point of view, we are not experts on insurance, but we have a point of view from ARM perspective. We look at insurance as one of the instruments. It's not a magic solution to solve all the problems of farmers and government. It's one solution. As I said before, we cannot treat insurance as all the other instruments in an isolated manner. We need to combine these instruments with some others. One of them could be information, capacities, credits, whatever. And however, insurance is a long process. It's not just buy the product, because farmers need to be trained, need to understand how to manage, how to use the insurance, and for what type of risk. That's why it's important to have them to assess the risk. Then at macro level, of course, what we need is also a policy, a regulatory frame to make insurance more attractive for farmers, and also from a macro dimension, also, let's say, sustainable in a long period, because we shouldn't forget that we're talking about developing countries that have limited financial resources. So if they want to invest in insurance, they have to be sure that there is a policy, the framework behind that can make it sustainable in a long period. And according to our analysis, this is probably linked more to what Federica will present after me, is the connection between social protection and contingency plan to insurance. This is an area that is growing more and more because the stakeholders, in this case the governments, have the capacity to understand and the resources to manage to decide or not if using insurance or not. So just the key message, because this key message is important, that when we design a project, a program, we define priorities, we use some, let's say, sort of checklist. What we recommend is that, strongly recommend, is that in all project design strategies development, we start from the risk analysis. This is the starting point. Before thinking about the instruments, it's important we make this risk analysis. It makes a big overview of target priorities at government, also farm level. This is really, really important. Then, as we say, once they find the risk, it's important we clearly define the roles and responsibilities. So create a network beyond agriculture expansion, beyond this specific risk. And finally, as I said, it's important we don't treat a risk, we treat a risk in not in isolated by silos in isolated manner, but we need to propose a combination of instruments, a package of instruments. And one of them is for sure information, data information, followed by capacity, it's a pillar, and then again could be diversification, could be perfect, and then your specific instruments identified during the risk analysis. So you can find all these information, methodology, results, or analysis on our website, because I said it's what we produce as public goods, and I'm pretty sure that my colleagues will continue talking about insurance, using somehow the same or part of our key message I share with you today. Thank you.
Thank you very much, Massimo.
Thank you.
Before we move on to Federica, as you said, we have Francesco coming in first because you have already built the interface to agricultural insurance. And I think that's where we should dig deeper into the subject before we then do the next switch. There's one thing I forgot to mention, that we would like to encourage you to use the Menti interactive questioning tool. Whenever we have time at the end, we will definitely respond to it, and if not within that session, then we will provide the answers afterwards. So there was the introduction given. It's now on the screen again, how to use it. No, now it disappeared. Good. So please feel free to make use of it. Francesco.
Okay, thank you, Michael.
Please.
I will try to, I'll start actually where Massimo stopped. And I will try to zoom a bit more into the concept of insurance and why insurance may be relevant for our target group, for the IFAD target group, but also for the last mile. I think Massimo would say that farmers face a wide range of risks that make their life unpredictable and also their income unpredictable from year to year. They're exposed to price risk and production risk. These are the main, apart from the life shocks that may happen to all of us. But the risks are particularly burdensome for smallholder farmers because their income is mainly rely on agricultural activities. They have limited access also to services and markets, financial services, markets. So risk is really an impediment and can really undermine development efforts and also the efforts in poverty reduction. So this graph shows a bit what can happen to the life of someone hovering around the poverty line, which is a typical IFAD target group beneficiary. So you might use your savings or your investment, the resources that you have, or you might get credit from a microfinance institution to buy your seed and to and to start the season, so that at the end of the year, at the end of the season, you have some income for your family. Then, rains may arrive a bit late, and that has an impact on your yields. But the impact is not so big, and you can recover with the mechanisms that you have, additional savings, family support, you can continue. But then, next season or during the same season, you might have a major drought that affects you and all the people around you, all the village. So this is where you can fall deeply into poverty. You may be forced to sell your assets, and then you may not have chances to recover. So insurance is a tool that in that situation may help you start again, buy new seeds, and doesn't let you go down the poverty line. So what is insurance? I think it's a financial, Massimo will say it's a financial product, definitely. It can protect assets, so the investments, and also has the possibility to promote development, because if you look at also case of smallholders, many financial institutions do not lend to farmers because the perception of risk or real existing risk. So also insurance can unlock access to other services. Or the same farmers may not invest in the farm because it's too risky to lose everything. So don't invest and buy better seeds because I can risk too much. So can definitely help manage unpredictable events, transfer risk away from individuals, so at the individual farm level, but also from businesses, agro-dealers, microfinance institutions, and also from government. Federica will tell us how governments can use this instrument also to reduce their vulnerability to weather events. It's also a product that is well suited to be packaged with other services, both financial and non-financial. Now, I think when we look at the relevance for why for IFAD is relevant, I think IFAD is a major investor in rural areas, and also our investments are really prone and subject to climate shocks or major events that can undermine the sustainability of what we try to promote in rural areas. Our beneficiaries, IFAD beneficiaries, are the one very often smallholders, they work in marginalized area, extremely exposed to risk, both price and weather risk as well. So this is where it may be extremely relevant. I think it's can support our strategic objectives and SDGs. And also is an instrument that can leverage what IFAD does. That we'll talk later on a bit more about that. But I think IFAD, through programs and projects, built the ecosystem that is needed for the insurance to be effective. So I think there is a lot of complementarity and mutual support between IFAD programs and the potential insurance schemes. But let's look at the market. I think if we look at the market, the penetration is still very limited, and it's mainly driven by government subsidies. If you look at the agriculture, premium is very high in the States and in Asia. In Africa, I think still the penetration is extremely limited, and also the government subsidies and support is quite limited. The good news is that for the private sector, but also for beneficiaries, that the market is growing rapidly. In Africa, number of people covered, increased in 3 years by 560%. And also at policy level, the G7, the G20, Paris Agreement are focused on insurance as one of the instruments to promote rural development and reduce also inequalities and sustainable development. But when we look at insurance, I think there are many different agriculture insurance products, and also beyond agriculture, there are many other products, insurance products. But if you look at agriculture, I think they're divided into indemnity-based and index-based insurance. And the indemnity-based is the typical product that comes to mind when we think about insurance. So meaning that you have a loss, you experience a loss, you have the insurance coming to your plot, will assess the loss and determine the payout. Index insurance is different. The payout is not linked to a loss assessment, but the payout is triggered by an index, which is a variable highly correlated to a loss. So for example, level of rainfall or temperature or average yield in a given area. I think the donor community and also government have been looking a lot at index insurance because it can overcome some of the major challenges of multi-peril crop insurance, indemnity insurance. Can reduce administrative cost, In theory, there are simplified claims processes, it's more transparent, and then also eliminate moral hazard, adverse selection, and can be bundled with other products. This is what theoretically should be the benefit of index insurance. So it's more suitable to smallholder farmers. It would be too costly for an insurance company to do the loss assessment in each individual plots of smallholders, and these plots are made normally in remote areas. So we have been looking, like many other donors and governments, look at the index insurance. There are also some challenges very specific to index insurance or so-called parametric insurance for smallholders. If we look at the last mile, there are two big family of challenges. One is linked to the product. So how we design a good product. Index insurance product needs data, good data. It needs data on crops and weather data. And the reality in many developing countries, and also developed countries, that these data are not available. The quality is not good. So if the quality of the product is not good, the product has an impact on product. So you might have a product that doesn't pay to a farmer, for example, doesn't capture properly the lack of rain or a drought, and this has a big impact on the quality of the product and also the willingness of the clients to pay the product. The other big challenge is linked to development costs. Still, you need specific expertise to develop index insurance products, and this capacity is not always available in all countries. Still, you have a pool of experts or broker organizations that are going, design, and live the country, even though now you have much more and more regional and country institutions doing that. The other big family, you might have a good product, but to reach the last mile and also to get to individual smallholders that live in remote areas is very difficult. And the challenge is to deliver a scale, because this has also an impact on cost, and also deliver a low-cost product. So I think this is also how to do that, and this is the other big challenge that we see, also solution for that, or how the industry is organizing itself to overcome this challenge. Then there is also another big issue is client awareness. We know that smallholder insurance penetration is generally very low, and also in our own life, we buy insurance only if we are forced to buy insurance. So understanding the value of insurance for smallholders that is exposed to a wide range of risk that happens every year, think about paying for something that can happen in 5, 10 years is difficult. So financial education, awareness creation has a tremendous impact on the uptake and also willingness to pay and to buy an insurance product. And definitely an impact on the demand. If we look at what can be the game changer, because these are things that if you had gone to a conference on insurance, index insurance 10 years ago, they would have said the same, what they have been saying so far. Currently there are some game changers, something that can really help the industry overcome some of those challenges, especially linked to distribution and product. So you have satellite data for the big issues of data that can complement on the ground data, and you have currently new satellites, daily information on every single part of the world is free. Data majority of availability is there. If I conducted a specific research on that, how to use the satellites for developing insurance product for smallholders. So satellites can do something, you still need on the ground data. These are the main findings also of IFAD research. Technology, mobile technology and technology can really help introduce efficiencies in all insurance processes. So this is also something that can reduce cost and can also help reaching the last mile. Mobile penetration is higher in developed countries than in developed countries, so it's very high. So it can be definitely a tool to get and to go through the last mile. Then you also have aggregators, microfinance institutions. You have many meso-level institutions that they have an interest and they see value in insurance. Microfinance institutions or financial institutions, definitely they're exposed to high risk, and insurance to clients is also something that reduces their exposure. Value chain players, agro-dealers, processors, they always have a benefit in promoting and facilitating beneficiary access to insurance, because they also strengthen their business. Bundling, the industry is coming to the conclusion that insurance cannot be sold as a standalone product. You have to build around an insurance product for smallholders many other services. So whereby the smallholder doesn't only buy the insurance, but buys what comes with insurance. So to make sure that, we were saying that to have an impact, insurance to be sustainable has to reach numbers. And for insurance to reach numbers, you need public-private partnerships. So you need some public goods in place. Public goods needs to be there so that private sector can enter the market. Without that, it would be too costly. So I think the role of government and donor is very clear. I think definitely the typical role on policy and regulation. But then when it comes to insurance, it's also the data, whether the data infrastructure, agricultural data and weather data. This is key. Private sector cannot invest in that, and wouldn't make sense to have every single insurer having his own weather station. So this is something, the public good dimension, and data is essential for food security, for agriculture, for many, many other things. I think Federica will also tell us more about that. But definitely this is something that it's important for the government and donors to invest. Private sector, of course, they have all the schemes, the majority of performing schemes are managed by the private sector. They have distribution. This is something where they have a comparative advantage. Farmers, of course, they have a big role to play, and not only farmers, but also farmers' associations. Farmers' organizations have an important role. So without that, it's very difficult for insurance to reach scale and be sustainable. Now, looking at, I would say, the relevance for IFAD, what IFAD has been doing, I think we, as an institution, as a development organization, have been trying to look at 10 years ago, together with the World Food Programme, what would be the relevance of insurance, how insurance could fit into our portfolio. So we did a lot of research at that time together. We did pilots in China and Ethiopia, but also a lot of assessment why many insurance schemes were not reaching scale. Then we also tried to build some public goods, because also our role as an international organization to build public goods, and we did a thorough review of all the satellite methodology, and we pilot the satellite methodology to develop insurance product for smallholders. And currently we are trying to introduce, using what Massimo was saying, a holistic approach, and see how insurance can complement what IFAD already does through our programs and projects, and how this financial tool can leverage and can complement and help building the ecosystem around it that is needed around insurance. And the objective is to use and promote this tool in combination, as Massimo was saying, with other tools, and make sure that can be used to enhance resilience and improve livelihoods of poor smallholder farmers. Some of the key takeaways for us also in our research, in our experience with agriculture insurance, is that definitely can complement and protect the sustainability of all the rural development initiatives. So doesn't work in isolation, insurance. Can complement risk management and agriculture development strategies. As I was saying, can only work if there are some public goods in place. Without that, would be relevant. If in a country you do not have access to seeds, to fertilizers, to financial services, insurance, the relevance and the impact of insurance may be limited. So I think you need public goods so you can complement but not replace other interventions. It's not, as Massimo was highlighting, that it's not always the right solution, so it doesn't cover all the risks. And actually, Massimo was showing what is, for high frequency, low impact events, for example, insurance is not an adequate product because it would be too costly, and probably there are some behavioral or agricultural policy changes need to be in place. It's more effective for highly impact and low frequency events. Distribution is as important as the product itself, and we said why. Costly, I think we have to foresee it's very costly, and you need, as a donor and government, to support also startups probably and institutions in the first movers, because there are some associated costs in developing index insurance products that may not necessarily be fully covered by the private sector yet. donor and government role is very key. And sustainability, really for long-term sustainability is really, there is need to, the system, the ecosystem needs to be in place, but also value proposition for all players. So for smallholder farmers, for insurers, they need to see profit behind that or a business case. For the delivery channels like agro-dealers, and for governments, because it's a cost, supporting insurance a cost, and they have to determine the cost effectiveness of the impact. I will stop here, and thank you for your patience in listening to this presentation.
And thank you to you, Francesco, for the wonderful presentation. So, Federica, now it's your turn. And I think the two gentlemen, the previous presenters, have already prepared the way for you to present by making links to the African risk capacity. By the way, the African risk capacity was in this room when we launched the platform for agricultural risk management. Absolutely. And more recently, you also have become a member of the advisory committee to the platform.
Exactly. Thank you, Michael.
And and perhaps you find a good answer to what has been said so far. That, for instance, insurance is not a standalone solution to the problems and to create resilience. And Massimo earlier said that existing social protection schemes and contingency plans show increasing interest to integrate insurance. And I think that's exactly what you're also supporting.
Yeah, thanks a lot, Michael.
Interested to hear.
Yeah, it's actually the natural consequence of the two previous presentations, because African risk capacity is a parametric insurance, is an index-based insurance, and it's among the agricultural risk management tools that have been outlined by Massimo at the beginning and very well specified by Francesco later among the insurance tools, a subset of the wide range of insurance products available out there. The key of the parametric insurance is being based on an index. Francesco outlined all the benefits of the index base, but the key for reaching the last miles for us is that it's quick. It's really, really quick. It's the quickest way to respond to a shock. In our case, we respond to drought shocks. We are planning also to respond to floods and tropical cyclone in the next future, but for now we're focusing on drought, and only in Africa, as the name can easily suggest. But the key concept is that being based on an index, the trigger is very, very quick. The response can be very timely. So just to give an institutional background, the African Risk Capacity is born within the African Union, is an agency of the African Union, and with its affiliate, with its financial affiliate, ARC Ltd, provides insurance to government. So it's a macro level insurance. The idea behind the concept of ARC is that, as I said before, the key to reach the most vulnerable people is to reach them very, very quickly after the shock strikes. So the normal timing for response to shock with the normal implementation of response that we in the humanitarian world is to wait for months before the response actually takes place. But being based on an index that triggers that quantifies the impact at the very end of the season in case of drought, so very, very timely, before the assessment takes place, and that's what takes most of the time, to assess and quantify the impact. But before going to the actual assessment, the index is supposed, and here it comes to the flaws of this type of insurance, is supposed to quantify correctly the impact of drought and the response be implemented right away. There's been an interesting study done 4 years ago, before the inception of ARC, that quantifies the cost in dollar terms of waiting for response to a shock. The cost is negligible, as you can see from the slide. It's kind of negligible the big word, but I mean, it can be recovered if the response happens within the first 3 months that the shock happens. It starts becoming quite heavy on the household, and we're talking about the last mile, so a household that cannot bear such a loss after the 4th or 5th months, which is the normal timing for a traditional response. It's been quantified to $50 more or less, but of course this depends on assumptions, but just to give you the scale of how much it increases, it exponentially increases with time. When the response occurs after 7, 8, 9 months, the cost gets too big and is intolerable. All the livelihoods are lost, all the assets are depleted, so the situation becomes unrepairable. So the idea of the parametric insurance is to kick in within this first 3 months so that the most vulnerable can recover pretty soon. So how does it work in practice? The index is constructed by being based on drought, of course, is constructed using satellite data for rainfall, which are, as Francesco was outlining a bit before, are available in real time, and that one makes the response pretty quick, are available in real time, daily, with the time span of daily data, very high resolution. We have data at pixel level, which is 10 by 10 kilometers, so very, very high resolution all over Africa in a uniform way. And these data are parameterized with crop-specific parameters that can construct a drought index that is crop-specific and then can be tailored by the specific needs of each country. Also at some national level. So it can be tailored and customized by each of the participating countries. And then this information about the spatial distribution and the severity of drought is overlapped with vulnerability information. So how can we really make sure that we are targeting the most vulnerable, that the most vulnerable are reached, and that those are taken into account in the quantification of the impact is through what we call vulnerability profiling. The two information, I will come to that in a second, the two information of magnitude and spatial distribution of drought and the vulnerability to this type of peril is then combined to quantify and model the impact of the drought, which at the end, right at the end of the season, after receiving the last data of rainfall, the index, if it works correctly, should give already an overview of how much it will cost in dollar terms to respond to that exact amount of people in that exact area for that type of already thought solution type of response. So the concept of vulnerability profiling is really important for designing the response and for targeting the most vulnerable, because it provides information ex ante about in each area where are the most vulnerable people to that specific shock. In case of drought, of course, we go and check the most vulnerable in terms of exposure to drought and in terms of resilience. So who are the ones that cannot cope in case a drought happens, and those that will, and where and who are those that will be the first hit by a drought, so the more exposed to drought, and to which level of drought, of course. So to have a correct quantification, of course, we can't avoid to look at the severity of the drought. So just very, very briefly on how do we quantify the vulnerability is to look at the resiliency, which is what we consider a static condition of the household before the start of the season. So not changeable within a day time span. And so in particular the poverty condition of the household, and the exposure, which is of course depending on the severity of the shock. By exposure we mean how the household is depending on drought-sensitive activities, in particular agriculture, livestock, casual labor in agriculture, and everything that is related to drought. Then the second work stream after the quantification of the impact, and that is key to make sure that whenever there is a payout triggered from the insurance, it goes in the right direction and it reaches the most vulnerable, it reaches the last mile, is what we call contingency planning that was first introduced by Massimo. The contingency planning is a document that the country that participates in ARC has to approve before, that the board of ARC has to approve for each country participating before they decide a policy, and is a detailed outline of every single activity that would be undertaken with using the payout that is issued by ARC. So before receiving any money, the government already should state what will they do with the money and who are they targeting, for which activity, and of course the amount and the area will be then driven by the index itself. But before, they have a sort of clear guidelines of how to spend the money. Then after having designed the index and customized it for the country-specific context, overlaying it with the vulnerability, which is country-specific, of course, information, so to quantify the impact, and having outlined the contingency plan, they can decide how to transfer the risk and how much risk to transfer to the international market. As it was said before, it's not the only solution, insurance, because as you can see, it makes sense, insurance, only after a certain frequency of events, because it's not the most efficient solution for drought that happen every couple of years, every second year in a country. Probably the most efficient ways and can be chosen among the range of agricultural risk management tools, but insurance is really cost effective when it comes to severe and rare events. 1 in 10, 1 in 15 events that are really heavy in terms of impact on the household livelihoods and on the government's budget, and that if they strike, they would drain all resources from other type of interventions to allow the government to respond to such type of event, while insurance would take away this risk from the government and allow the normal activities to proceed, even in the case of a shock of such a severity. So in the first 4 years of life of ARC, there's been 4 payout issued to countries. The first year in 2014, the drought in the Sahel, so the payout received by Senegal, Mauritania, and Niger. The 2015-16 was the case of Malawi. They received the payout. This year, Mauritania is not yet official, but it's definitely sure that they will receive a payout as well. And the target, as you can see, the activity implemented are targeted food distribution for almost all of the countries. And by targeted, of course, the women groups, children, indigenous people are the first to be targeted in this kind of activities. It's also to be said that the insurance kicks in, as you can see in the previous slide, kicks in only after a certain level. And this level is what I was saying before, what makes it cost effective to have insurance. But below this level is supposed to be the government to take responsibility for responding to this type of shock. So it also relies on government how to make sure that the first ones to be reached are the most vulnerable. But in any case, when by insurance and macro level, the contingency plan is what makes sure that the most vulnerable are the first reached. And if there are any questions and clarifications.
Thank you, Federica. Yeah. Well, as said, you have already communicated to each other. You have made reference to each and other's presentations. But is there anything else you want to ask amongst yourselves, add something or challenge one of your co-presenters?
Okay, I can probably ask a question to Federica. On ARC, I think you were saying that the relevance of ARC is linked to the insurance component, that is strongly linked to the capacity of the government to distribute the payouts properly and identify who are the most vulnerable. If you can explain or share a bit more on what is the lessons with that, and I think where are the major challenges that you see, or if you have good example of governments that have been fast to react, fast enough to react promptly and to use the payout effectively and to distribute quickly, and what kind of mechanism some government have been using for that, for the distribution. Because I'm asking the distribution because I think there are a lot of similarities also with the macro level. So how the government distribute the payouts eventually to the most vulnerable. So if you have some examples or
Yeah, thanks, Francesco. Something I forgot to mention is that the response is most effective when social safety net are already in place. So in all the countries that received the payout, a social safety net was already in place and was already functioning before, for years before. So the quickest way to use the funds from the payout was to scale up this safety net. Practical example is that the payout are triggered at the end of the season. Within 3-4 weeks maximum are in the government budget, and if the safety net is already in place, it can be as quick as a week to reach the beneficiaries. Let's say regarding the issues that we are facing as an index-based insurance is the so-called basis risk, meaning that the index is not correctly quantifying the impact, and that's a problem that it's implicit in the nature of the data that we use. As you were saying before, the problem that was 10 years ago there about satellite data, about availability of ground data is still a relevant problem. Even if the resolution is high, the time span is very, very frequent, still satellite data have some severe mismatch with the ground data, and ground data are very difficult to find. So also to calibrate the index is very difficult to calibrate it with reality. So this is really the key of index-based insurance, the key challenge of index-based insurance. And in terms of government capacity, which we have good examples in ARC, for instance, Senegal and Mauritania have been part of the program for 4 years in a row, and now they are customizing completely on their independently. Before, of course, ARC provides technical support, but the theory is to fade away year by year and let the country completely own the project. And Senegal, Mauritania, that have been in ARC for years, have completely independently customized their index and outline their contingency plan. So the responses at government level are really promising. But what we are facing is also what we call premium payment fatigue, which is implicit in insurance. If nothing happens for years, or if the country is insuring 1 in 15-year event, it's difficult to wait theoretically up until the 15 year of paying a premium with nothing received back. Because it's a very difficult concept and very difficult to digest it politically, to not see any let's say any reward for the initiative taken. Of course, it's a paradox, because a reward would be that. If we consider a payout a reward, of course, it's because a drought is happening, so it's very tricky to define it this way. But in the political world, that's what the risk is. Not seeing anything to justify the initiative taken is leads sometimes to not participate the following year.
Yeah, from my side, I have a, let's say, sort of comment and question for both, in the sense that you already mentioned in your presentations the importance of capacity, strengthening capacities, because you're talking about, let's say, new products, because insurance is quite relatively new, both at government, macro level, then community level, farmer level. But on the other side of the line, and to know how do you approach, let's say, governments, farmers, according to your experience, to have a better understanding, easy understanding of insurance, because I say it's a quite complex instrument somehow, because you're talking about parametrics, the language is quite technical. And the same direction, this morning the Professor Ravillon, if I'm not wrong the name, of the Georgetown University, mentioned one of the topics for agricultural management, which is the information. He says something like, what government know about the agricultural sector if they don't have data information? I'd like to know how you deal with this issue, because I guess for you is the same. How can you propose a new product? How can you make attractive, insurance, both at macro and micro level, in countries where data, information are weak or somehow also not accessible? And this is the experience we have directly in PARM, when you make our assessment analysis, how we fight to get credible and trustable data. Thank you.
Please, just very concise answers, because our audience also has some questions.
Do you want to? Okay, from the client perspective, you're touching upon a very sensitive and challenging task. How to make the case to smallholders that insurance is relevant. I think, definitely smallholders look at the product has to be very easy to understand, affordable. It has to provide value, and it has to come from a trustable, from an organization that they trust. I think the most successful, but still, I think you have penetration is very low, because the concept of insurance, we say, is very difficult to transfer. You are paid for something that may happen, may not happen, and you have other risks to cover. Why should I spend my money for that? I think a lot has to be done with financial education and awareness creation. At the same time, you have to be the successful example at the one where insurance is linked to other agriculture, insurance is linked to other services. So farmers do not buy exclusively insurance, but through the insurance probably they can have better access to credit, so maybe linked to credit. I think in India, if you get a loan from a bank, you need to buy insurance, or some through agro dealers. So you buy the technical support that you may get from the agro dealer, the capacity to lend your production to agro dealers. So you have to package and to make a value proposition to the farmer. So the most successful schemes are the ones that manage to do that and not sell insurance, agriculture insurance, as a standalone product.
Yeah, but very concisely, we rely on PARM to share the knowledge about insurance products and generally other tools available. But more practically speaking, I can give you the practical example of ARC. Is every country that wants to participate in ARC has to take a 12-18 months capacity building program. And no insurance is purchased, no policy is signed before that capacity building program is completed. And still, the challenge is that after completing such a long process, then the government change, so we have to start all over. But there are good knowledge transfer, at least from what we saw so far. But in every country, there is a technical working group that that keeps the knowledge and the capacity in each country.
Well, thank you very much. And I think with this, we should open the floor for the audience to come up with questions or comments. But please be very precise, not making long comments, so that we have enough time to respond to all the questions. Please. Oscar, please.
Thank you. I have two questions to Federica. Very nice presentation. The first one is, how is it funded? Because, and that relates, do you think a country would borrow funds from an international institution to provide this type of services to other countries? And, to small farmers. And the second question is related to potential moral hazards. If an insurance creates a disincentive to produce on market basis managed risks, and therefore a disincentive to be more competitive if the insurance doesn't exist.
Thanks, very relevant points. How is it funded? The goal is to have it funded by country-owned budget, and so far 95% of all the premiums have been paid by national budgets. Because of the premium payment fatigue that I was talking about earlier, we found that it might a sort of support in premium payment might be needed in the short run because of for those countries that are not receiving payouts because of drought not happening, and that of course it's difficult to then continue to pay an insurance for something that is not paying out. But beyond that, the aim is to integrate in the policies of the countries and therefore in their own budget the premium for insurance. And regarding to moral hazard, being a macro level, this is a less relevant issue than might be a micro level, but still it is an issue. It depends on how the countries construct their index. It can be also seen as an incentive, because being the index based only on purely rainfall and other parameters, but the main driver of the drought estimated by ARC being rainfall, every other initiative that might improve the tolerance of crops, might improve the response of the yield response to drought, will not be, let's say, seen by the insurance. So they would receive a payout, even being kind of protected by other type of tools.
I saw your hand up.
I also had a question on the funding. The farm insurance schemes are great, but in most countries, even when farmers pay a premium, actually they're heavily subsidized by the public sector. I was wondering, in the case of African risk capacity, is there any plan in the future for farmers actually paying a premium? Or, because I understand they are heavily funded by governments, what about in the future having also farmers paying part of the premium, and whether there's how this could be priced?
Well, in the short run, no, because it's a macro level insurance, so it will be a government level. There are promising interactions we are having with micro level insurance in some countries, in particular the R4 initiative and WFP as well. But it's not, before we have to really study the feasibility of the same index at micro level before the designing a project like that. So for now, the short answer will be no, there is no foreseeing premium paid by farmers.
The lady in the middle, please. Yeah.
Thank you very much. Thank you to the three of you for very informative presentations. My question is for Federica. Some others organizations, for example, WFP, are interested in ARC and invest in this type of what they call ARC replica. My question would be, how do you work with them, and what is the broader picture of ARC? What kind of organization are interested in this?
Yeah, Replica is an initiative that is piloted this year. Just to give a little introduction to the rest of the audience, and it involves international institutions to duplicate the premium that are paid by countries. So to buy an additional coverage of the risk that is transferred by country. So far it's piloted in 3 countries, and we want to see the key challenge that we are studying now with the pilot before opening to every interested institutions, that of course the more institutions come in the project, the more risk is covered, and therefore it's the better. The key challenge is the interactions between government and the institutions. So we are studying closely this, how it's evolving now that it's starting in few days, because the policies are starting in few days, and according to the lessons that we will learn from this first year, I will give you a more specific answer. But for now, in theory, the broader set of institutions that duplicate and replicate the country's coverage will help a government to lower their attachment, because now for cost reasons is pretty high. So only very severe droughts are insured because of the cost of the premium, or only a small percentage is transferred. So the replica partners can either lower the attachment or increase the coverage. So it would be definitely a benefit, but we really need to make sure there are no negative side effects with this interaction, because the aim is to always have the government to own the project, to own the insurance, and yeah. Let's see how this sense of ownership is affected by this type of project.
We can do the following. We can take the last question from the audience, or we can quickly answer the 5 questions which we have on the screen. Is it a burning question?
Why don't we do both?
Oh, we do both. Okay, we have the liberty to do both. But very, very briefly, we have only 1 minute.
Okay. First of all, thank you very much for all your presentations. Very interesting and stimulating. Just a very short questions. Today we spoke about the importance of public-private partnership for rural protection and development. Is there any projects for an involvement or a form of involvement of private insurance companies in this kind of insurance instruments? Thank you.
Francesco, I think you can quickly answer that.
Definitely yes. The answer is yes. I think if you see the main scheme are run by private insurers as well, and then also reinsurers. I think both the industry is there, so you have a private institution that are interested in that. I think one of the challenges they have is reaching scale and cost. So there are a lot of things are subsidized, which is not only premium subsidies, but there are also donors that help them in developing the index, in distribution, because to cover the first mover cost. But yes, definitely they are there, and actually you also have some schemes managed directly by the government, but I think the most effective one managed by the private sector. But the issue of scale is a big issue, and subsidies are currently play a role in that, in letting private sector be more interested in that, because the numbers are still low to have sustainability.
Well, then quickly through the 5 questions. I think we have already partially answered them, and you pick as you think appropriate. So how to convince smallholder farmers to go into microinsurance products? Who insures the insurers? Refers to reinsurance you have just been saying. Are premium payable by farmers? How to protect smallholder farmers when they get inside the insurance market? And is there perhaps a mission drift of the insurance companies moving more to the wealthier farmers? I think these, in a nutshell, are the 5 questions. Can you answer them quickly?
Okay, very quickly. I think we cover a bit the one on affordability is a big issue, and this is strongly linked to the quality of products and also how to reduce costs. And we say that probably using technology have a role in that, and also probably I think farmers has to benefit for that. And we also have to realize that farmers are not all the same. We should segment that. So you have subsistence farmers, you have more farmers linked to functioning value chain. So I think in the structure in the product may be more challenging for subsistence farmers, and this is where also probably government intervention may be higher, but they also have farmers that are in functioning value chain, and this cost should be cost of the value chain. Then also how to protect. I think this is the role of the governments, and when we say role of governments, regulation, policies and regulation is really that. Client protection is key, especially because there's a product that are, I think Massimo were highlighting, not easy sometimes to understand. You have to make sure that the product is simple, is well communicated, and smallholders knows what is buying, and also that payouts are, and the product itself is assessed by the regulators. So you need a strong, regulation also for that and capacity to do that.
Good. With this, we have come to the end of this session. Thank you very much for your contributions, for your patience, for your attention. And I have been tasked to announce the following, but I've mentioned already in the very beginning that we don't want to take too much time of the reception. So the reception is coming next. There is a cocktail being served where lunch was served already earlier today in the executive dining room. So when you leave the hall, straight on, and you will find it over there. Enjoy it and have a wonderful conference tomorrow as the second day of this IOE event. Thank you very much.